Gosh, that's such serious music. I need to find some better music. Welcome to Top Tier Outlook. Hope everyone's having a great weekend and that you spent a little time away from the screens, but it's back to the charts as we prepare for what should be a really interesting week. So I'm working right now on the Top Tier Outlook newsletter at the moment, and we're looking at leading sectors this week in top tier. We're looking at moves to watch based on the way in which Friday's closed. So by Friday, we knew what the JOLTS number was. By Friday, we had heard from Powell. By Friday morning, we got non-farm payroll. And with all these things, still at the end of a trading session, at the end of a week, we were able to close certain levels. And that in and of itself begins the question of, and I know I probably saw more headlines this week about recessions. Are we really still talking about something that Jerome Powell has pretty much rendered without definition? I mean, the talk about recession in terms of how we should respond to that word in our trading has become virtually useless. And yet here comes the clickbait, right? Recession. Are we still talking about inverted yield curves? I mean, really, are we still going to go there? What happens when they uninvert? What happened to all the catastrophic sell-offs we were supposed to see? I will show you where it still looks really ugly. But this is sort of the way in which, if we take a look at the way in which most of the banal analysis out there likes to start, right? Let's look at the long and the short yield and talk about things that really don't have the data when you look at them that one would think they have. Yield curves are one of them. Why we're still talking about inversion of yield curves is hilarious. But hey, look, I'll let those folks do what they will. The rest of us, why are we here on a Sunday? We're making trades. I'm going to talk my book. Anything less than that is a waste of your time. I know, I think I woke up to the show a little punchy, but I hope you all appreciate what I'm trying to say. Who cares what I think, right? Everyone here should be, Rog, how are you going to position yourself this week? And I'll tell you, it's going to be very similar to the way I've been talking about doing it for the last few weeks. So first of all, where is it ugly? There are some ugly corners of the broader markets. Number one, I would have to still say, is the Russell followed by regional banks. And even though they had a good week, right? They had a nice week. That week was not enough to carry regional banks even through something as simple and important as the 200 period exponential moving average. Russell, which is weighted number one with regional banks, is still below the 200. If you want to start with a really easy sort of mile marker or lines in the road, just to say, okay, which side of the road are we on? Start with that 200 exponential on a daily time frame. It will tell you a lot. And then, if you bounce that against something like the NASDAQ, right? We've been above that 200 very consistently. And even with Apple's struggles, even the XLK, the number one weighted sector in the NASDAQ, has managed to keep that really consistently. Meta's been strong, Google's been strong, but consumer discretionary, or I should say Amazon and Tesla are the number one weighted stocks here. Amazon's been strong. Tesla's still been a dumpster fire, right? So when people say, should I buy Tesla? I'm thinking, is that the top of the list of symbols you're looking at? Or should that be maybe way down the list, maybe on the back burner, because we have things like Meta, we have things like Google that never even broke down through their 200. So remember, as we go into the end of the year, strength will get stronger. That's what window dressing is about. That's what the Santa rally is about. Weakness will get weaker. We saw that in October. We saw the many mutual funds that do have an October year end. We saw a pretty dramatic response to that this year. That's not always the case. But if we're looking for a map to December, we're looking at a map to what is the tax loss harvesting going to look like in December, we've got a map for that now, right? We've got something we can say, all right, well, I don't think anything magical is going to happen in the next roughly 80 to 90 days, right? So whatever the tax loss harvesting, we're probably going to see that echo into middle to late December. This is good. This is good to know. And we also know now a lot of the bond funds, regional banks, small cap, healthcare, right? These are still a mess. And by mess, I mean they're not bullish. But let's face it. Why am I looking bullishly? Because we're getting some really nice clarity. And XLF is a great example of where a week can make a huge difference. Take a look at the XLF here. We have now found ourselves back to and through. Now, XLF on October 17, take a look there. We got to that level, but it couldn't get through it, could it? Here on Friday, November 3, here we are not only taking it on, but trying to close above it as well. This is the first step, right? This week, we've got to see the follow through. Otherwise, it's for naught. And then I could take a look at the stocks within the XLF. JP Morgan, number 2 weighted stock above the 200. Berkshire Hathaway is another stock to watch. It's the number 1 weighted stock in XLF. Bank of America, trying to get there, but not enough yet, right? So these are the pieces that we want to keep an eye on. But healthcare is still a mess. Regional banks are still a mess. Russell is still a mess, but that's really it. I'd say that consumer discretionary is wobbly, but heck, even it got some at least some footing above the 200, while Amazon has been on a nice march. So when folks ask me about Tesla, gang, of all the things we could do right now, let's avoid Tesla, right? Apple at least has gotten back above the 200. Microsoft never broke. So think about strength staying strong, weakness getting weak. This is not the time to bottom pick. This is not the time to say, well, this stock's been hit really hard. Maybe we'll rally. Q1 will be, but be very careful here in Q4 for that type of approach. Timing matters. And in this case, strength will get stronger. Weakness is likely to get weaker. And then things that are not clearly weak or clearly strong, leave them aside. Find the best example of a downtrend. Find the best example of an uptrend and focus on those trends. So I hope that makes sense in terms of what we're looking at as we go into the second week of November. Really excited to have some clarity. And by the way, what other clarity do we have? This is the most dovish leaning Fed fund futures, the target rate probabilities that we've seen in a long time. For the first time in quite a few weeks, we can talk about a maybe rate cut. But instead of a July, now we're talking about June. So everything has kind of crept in closer. And I'll tell you, two corners of the broader market will be happy about that. One are bonds. Bonds are a long way from that 200, but they're trying to wobble into a neutral environment. Bonds need to get above, and this is the ZB futures, bonds need to get above 114. Bonds need to stand tall above 114 to really look like it makes sense for the Federal Reserve, to be moving the rate cuts in and that the bonds are happy about it. Because one thing can be said for sure, that bonds have been communicating to the Federal Reserve, yes, rates are high, but additionally, you're keeping rates too high for too long, right? That's something to think about. So let's take a look at this bond chart a little bit, because this in the euro is going to be really important. And if you haven't ever pulled up daily ZB, you really should. Bear with me one moment. Daily ZB and daily ZN. You really should take a look at both of those. So here's a ZB. Here's a ZN. This is the long bond and the 10-year, right? The long bond and the 10-year. Okay, both of them are the same issue. They're transitioning from downtrend to chop. And here's the euro. That euro needs to get above the 200. So it's the same conversation we're having. We've got to get above the 200. We've got to find our way north of some key levels. Key levels meaning what? Let's start with the 200. Let's start with some near-term resistance that the Darvis is looking at automatically. These are some of the symbols that I'll be looking at in this week's top tier outlook. I've been bullish all darn year, right? And if you haven't known that, we've been bullish in the NAS mostly because the tech sectors have continued to outperform. We've spent very little of 2023 below the 200. The one test we did have on the NQ futures in late October was a very brief test and up and away. So please be careful when you hear analysis talk about the markets. It's nonsense to generalize treasuries, currencies, energies, metals, and the indices when look at the Russell. By the way, I hope this finally kills this persistent nonsense of the Russell leading things. Don't look for leaders, don't look for laggards. Just ask yourself, what is the Russell composed of? It's composed mostly with the heavily weighted regional bank, the KRE. It's doing its own thing, right? It's weighted in its own way. So I know there's a lot of things that get repeated. It doesn't make them true. It doesn't make them true. And so please, 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 as we start to wind down the year, I got a lot of emails and I saw a few things from members of the Sector Secrets Mastery last week. And some of them said, hey, Rog, October was green. And I remember telling that member, said, that's a pretty rare thing. You just traded, this member, one of the most difficult months of this year. I know my October was green, but not like September, not like August was, right? And I share my trades with my members, which is to say, who cares about what I think? It only matters what I'm actually doing. And I said, look, if you can trade October, if we get a month like July again, that's going to feel like the easiest thing in the world because we're able to take much more difficult price action, manage risk, and take some profits. So pretty stoked about that. I was pretty stoked about the fact that we were able to escape October, and it was a hard month, gang. Hear me out. I've been doing this a minute. I know many of you have as well. October was not easy. And November is already acting much kinder. And with these kinds of moves on the daily time frame, sentiment should be a little clearer and follow through. And this is something, some things I can only hope for. Hope meaning I can't control what the market's going to do. But if we can start to get some follow through, we can start to lengthen our time frames and look for more follow through rather than an hour or two or maybe a 1 or 2 days. See if we can't get 3 to 5, 2 to 10 day follow through, which would be fantastic for our short term swings. All right. So first question here. John asks, is there any upcoming Black Friday special for Sector Secrets? John, I do not know what the Black Friday specials will be. I'll be surprised if there isn't, but I do not know. I haven't asked. I know that Black Friday sales are starting now, but you should get some emails really soon about that. I don't know if it'll be Sector Secrets. I don't know if it'll be daily price movement range or hourly price movement ranges, but you all know if there's a sale, I will absolutely tell you. Yeah, I will absolutely let you know. As soon as I know for sure, I will let you all, I will give you all the details and let you all know because, my mind, take advantage of the sales. Absolutely. Take advantage of classes even because when I do a class, we include a lot of indicators with the class itself, which is, again, I just want to get some really good bang for your buck because the money that's you're able to save goes into your trading account. And I think that's really important to me anyway. But I'll let you know, John. I actually don't know, but thank you for asking. Nick, I hope I'm having a good weekend. I am. We're working on the office here, working on the office that we're getting ready to open. So yeah, I've been doing a lot of work between the two offices. So it's been a productive weekend. I don't know about good, but it's been productive. Does this look like we're breaking out of the neutral zone into a bullish trend on Euro US? Yeah. So I love that you're looking at Euro US or 6E. The simple answer is almost, not quite, because take a look at that wick. And you might say, Rog, is 6E as important as Euro US? No, Euro US in terms of Forex is far more important than the 6E. So let me pull that up. So the challenge of the 6E is that it's the futures contract. It's a smaller amount of daily turnover. The Euro US, of course, is far larger, but they look the same, right? Not yet. So close, though, Nick. And that means that the dollar is at the precipice of a more significant downturn. And if yields are going to start to move down as the ZB and TLT and ZN and IEF are all moving up, this is looking like the euro could be ready to make a move. And by the way, I would also say keep an eye, those of you that have been playing the yen, because one of the things that's been making the yen trade so great has been of course, the yen weakness coupled with the dollar strength. So as long as the yen remains weak, that should be bullish for equities. As long as equities are bullish, that should keep the yen weak. That's the way it feeds itself. But if the dollar starts to lose some of its structure, its upward structure, the 6J might get a little choppy. So those of you playing yen, yeah, that might get a little tricky there. So actually, let's take a look at some more of these currencies for a moment, because this brings me up to the dollar index basket. So let's talk about this basket conversation. Let's go back to 6E for a moment here. Bear with me. All right. So when we take a look at the 6E, we're talking about 58% of the US dollar basket. So we're looking at the 6E. This is 58% of DX, UUP, DXY. And that means that everything else in those symbols are 5 other currencies that are duking it out for that rather minor 42% of weighting. So one currency is disproportionately going to dictate what the dollar does next, and that's the euro. Now, dollar index trades on the Intercontinental Exchange, which I'm sure is a fine exchange, but it's an expensive one to keep a dollar index feed. 6E should actually come with most of your feeds. It's basically coming through the CME feed. So this is a great way. In fact, it's a proxy, but it's actually a preferred way to understand what the US dollar is doing by removing those fairy dusted currencies in the dollar basket and looking at the main one. So yeah, it's a big deal. This is a big deal in a lot of ways. Now, am I one of those people that's going to say if the dollar begins to weaken, this is great for the equity markets? No, gang, that's not how it works. But the reason the dollar is, and by the way, again, let's just kill some of this ridiculous, repeated, sell in May and go away caliber ridiculousness, right? Russell does not lead. Strong dollar does not kill the market. However, the reason the dollar strengthens, hawkish monetary policy, equities hate. So they have a commonality, right? It's a big difference, causation versus correlation, right? They're both correlating to the same thing, but a strong dollar does not cause equities to move lower, right? So these are things that we want to keep in mind as we're seeing some of these shifts in the monetary policy potentially, and certainly in the equity markets. All right, so Yi says we'll be looking for some possible ES shorts at resistance this week. I don't know if it's going to be ES, because I'll tell you what, Yi, 2 really important things happened. One, we got through the 200, just below 4,300. XLF broke out too. Now, you'll remember, Yi, one of our members at the Sector Secrets Master, you'll remember that when the XLF financials and the XLK are tech-weighted sector, Apple, Microsoft weighted sector, when those are moving together, that is disproportionately really good for the S&P. So the NASDAQ can move higher on XLK and XLC, tech and communications, Apple, Microsoft, Meta, Google. But if tech is moving, XLK, and then say Berkshire, JP Morgan, Bank of America align and the XLF starts moving, now the S&P is very happy about that. And so I want to be cautious with that because some key levels were broken there for sure. Mr. Walker asked, can I use the daily price movement range, a DPMR, on 1-hour charts? Mr. Walker, not only can you, I recommend it for short-term 1 to 3 day swing entries. Yes. All right. Colin says, nice green candle with the green shirt. Oh, yeah, I'm wearing green, huh? For the show. Yep. I'll have to wear my my bull shirt tomorrow. It's got a big cow on it. It's bright green. I'll have to wear my bull shirt tomorrow. I'm going to dig that one up. That's one of my favorite shirts for when I'm on Benzinga. And that and the diamond hands, which I've had for long equities pretty much all year. All right. Especially tech. Apple just got above the 200. Anthony, it's on the list. Is it my favorite? I think there are other stocks in our Magnificent 7 club that I probably like a little better. However, in terms of retests on a buy, there's 2 things I'll look at, and that's a great question. I'll look at about the 173.65 to 172 level. That's my daily price movement range as of right now. And then we've got the 200 sitting at 172. So yes, a retest in that area makes a lot of sense. Yeah. So let's see. Green eggs and ham. Yeah, green eggs. I actually answered. I thought I answered your question, but if it didn't post, sometimes YouTube's a little quirky. So the way I think I answered your comment on the question, thank you for it, was that sometimes it's just a matter of those criteria that we know are ideal, right? All the things I wish from a textbook perspective that I had. And then I look at it, if there are 4 boxes that I can check for a textbook trade, if I can check 3 out of 4, that's still pretty good. So in this case, if Pingala remains unchecked, what did I have, right? I had a HPMR, I had Darvis, I had oversold stochastic, we had a yellow zone. So yes, is that going to undo the trade? No, we have to be able to differentiate. And I'm trying to remember because I think I was pretty pleased with the way I answered the question last when I saw it. Where is it? Hang on, I'm going to see if I actually can find it. But yeah, so I think of it this way. Is that going to stop me from taking the entry? No, it's a binary conversation of either flat, nothing, or long. So that's the first step. And the second step is, am I satisfied with which boxes I can check, right? Am I satisfied with which boxes I can check? And so that's the way I would look at that. And yeah, for whatever reason, green eggs. Yeah, I'm sorry about that. I know I replied to it, but sometimes I notice that YouTube, when I reply, it just doesn't stick, unfortunately. But anyways, that's what I basically said. So it was either long or nothing. And yes, the Pingala box could not have been checked, but a lot of others were. So we were able to take the trade. And I did. Not only were we able to, we set it up as an alert. And that was a really great trade for us on Friday. We actually ended the week really well. And I hope I really mention it clearly. Because again, gang, when I cut videos, I'm not extrapolating about highs. Oh, look at the boy. He's making an appearance for the show. Hey, all right. Somebody wants attention. So the idea here, if you take a look at that video, the idea was, hey, gang, we had a rough start to the week. I went 0 for 3 on Monday. So again, talking my book. I'm not prognosticating about where we're going. I'm not talking about what could happen. I'm not mentioning things like recession, because what's the recession trade? Just short everything? There's a lot of banal, nonsensical stuff out there. And I hope that's not where we're ever going. So I love the questions. I appreciate y'all asking questions that matter to traders, right? Not cocktail talk, not broad discussions, entries, exit, risk management. So in that vein, great. If you watch the video, which I'm sure you did, my friend, 0 for 3 on Monday. And then we spent the rest of the week modifying, being a little bit more conservative, waiting for more, like you mentioned, criteria to be met, right? Being more conservative can be not only waiting for a deeper pullback, but it can also be, hey, if I have 5 criteria that I like to see for a specific setup, maybe I'm not going to tolerate less than 4 being met. Maybe I need to go 5 for 5. Right. So those are the modifications that we can make. And that was basically a looking at a checklist and saying, all right, I've got everything but the Pingala favoring me. It's long or nothing. So make sure at any time we're being binary about that decision. Either you can buy a call, or you can short and buy a put, or nothing. There should not be another choice. When you've whittled down to that, you're in a good place. So I hope that makes sense. As far as that trade goes, my friend. And with that, gang, that's a wrap for Top Tier. So thanks as always. I appreciate my members and I appreciate you all so much, because what we're sticking with is what we're actually doing in the market, and not talking about big picture, speculation about where something could go, but rather if a certain price criteria is met, can I control risk, and where's my target? Because gang, that's trading. So thanks for keeping it. Thanks for keeping it to trading. Thanks for keeping it actionable. Y'all are great. I'm so grateful for the audience we have. I'll see you tomorrow for Charts and Coffee, 9 a.m. Be good to each other, gang. Enjoy the rest of your Sunday. I don't know how many of you are watching this Cowboys-Eagles game. I was not expecting the Cowboys to hang in there with the Eagles, but they're making it a close one. They're making it a close one. All right, gang. Be good to each other. I'll talk with you soon.